This is Cedric West of CS West and Associates PA, and I specialize in tax strategies and planning for individuals and business owners. Today, I want to go over four unique education strategies that you can implement that will help you save on costs and that will help your children's or beneficiary future as well. So we all know that having a good education can really change your future. It can really brighten up your future. So whether you are going into kindergarten at a private school, or if you're going for your second master's or doctor's degree, we all know that paying for education it's a huge financial burden. Okay, so I'm going to go over four education plans that can help ease that burden for your beneficiaries as well. The first plan I want to go over is what they call the 529 plan. So what that does is that the 529 savings plan allows for an annual free, a tax-free distribution per beneficiary. So what happened is that beginning in 2018, these plans can fund the education costs of students in grades K through 12 who are enrolled in religious and other private schools. Okay, so keep that in mind. However, the distributions for grades K through 12 cannot exceed $10,000 per beneficiary, meaning that if the tuition is $15,000, you can only take up to $10,000 under the 529 plan. Okay, and another caveat is that not all state sponsor this plan. So you definitely want to check. You definitely want to check your state to see if they sponsor this plan as well. They may sponsor it, but they may not sponsor the suspended use of these funds. Some states have adopted it, some states have not. And also to keep note that the IRS do treat the 529 distributions as a gift. However, because you're limited to only $10,000, you fall under the gift tax exclusion. So you don't have to file a gift tax return and pay taxes on those gifts in that regard. The second plan that I want to go over is the prepaid tuition plan. Some states offer prepaid tuition plans that lock in the future tuition costs at current rates. For example, I buy into a prepaid tuition plan. College right now costs $15,000 a year. 20 years from now, when my child grows up and when she goes to college, I'm pretty sure that college is going to be much higher. But because I invest into the prepaid tuition plan, I get the current rate. The current rate at the time was $15,000 a year. So even if it's $25,000 a year for college, I'm locked in at that $15,000 rate. So that's a great benefit plan for you to take advantage of. However, there's another caveat with this plan is that only 18 states, okay, sponsor this plan. And of those 18 states, only 11 of those states are accepting new applications. So you definitely want to check your state to see if it sponsored this plan, the prepaid tuition plan. If it does, see if they are accepting new applications. If they are, take advantage of it now, okay? And last thing with this prepaid tuition plan is that distributions from prepaid tuition plans generally are limited to expenses for tuition and fees, okay? Not room and board, only tuition and associated fees for the cost. The third plan that you have is what they call the Coverdell Education Savings Account. Like the 529 plans, the Coverdell ESAs can help pay for education costs. They can also help pay for schools and expenses such as tutoring, uniforms, and books at K through 12 schools. The benefits phase out completely for single filers with a gross income of 110,000 or above. And if you filing married filing jointly, then that phase out period starts at 220,000 or above. So the caveat for the Coverdell plans is that the total amount of the contributions to these plans cannot exceed $2,000 a year. Okay. One of the last plans that you can invest into is what they call the the U.S. Savings Bond. So individuals who purchase the U.S. Savings Bonds for higher education costs may exclude the interest earned on those bonds up to the cost of the qualifying education expenses. So what I mean by that, just say for example, I invest into a U.S. savings bonds. Over the course of 10 years, I have, or for example, over the course of that year, Just say I have accumulated $1,000 and interest earned. Normally, what happens is that I would have to include that onto my tax return as income. But if I purchase the U.S. savings bonds for education purposes, then I would not have to include that $1,000 of interest earned onto my tax return. Okay. But the caveat to that is that if you are filing single, then the phase out amount starts at 79,700. So if you're making over 79,700, then that's when the phase out rule starts to begin for the U.S. saving bonds, and it's 119,550 for married filing jointly. Okay. And the last caveat to this particular plan is that this inclusion is not available for taxpayers who are filing separately. So if you're married but filing separately, and if you have a U.S. saving bonds for education purposes, then this inclusion does not apply. Okay. So those are 4 great plans, education plans that you can invest into. Number one, you invest into your child's future. So at some point, I mean, they're going to go to school. Whether it's K through 12 or college, they're going to go to school. So why not invest into these plans and state-sponsored programs that's offering these benefits? So definitely, the most important thing is check your state to see, number one, they're offering this plan, okay, and number 2, to see if they are accepting new applications. This will definitely help reduce the tax liability, and it will make you much smarter. Of paying for education now instead of in the long run, when the cost of education is going to be much higher by the time your child or dependent become of age to attend college, for example. Anyway, thank you. If you have any additional questions when it comes to these 4 plans that I have mentioned, set up some time with me. I definitely would like to go over them with you, see how you could implement this into your livelihood and to help you save on taxes. Thank you, and I'm looking forward to hearing from you and working with you. Have a great day.